Welcome back for another Hoya Capital webinar. We're actually chatting with an old friend of ours, Anthony Coniglio, the CEO of NewLake Capital Partners. The ticker is NLCP. Got a couple of slides on the screen here we'll zip through, and then we'll turn off the slides. We'll have a conversation, and maybe we'll learn a new thing or two since we last spoke. About a year and a half ago at this point, it seems.
Can't believe it's that
Compliance.
long, David.
Time flies and you're having fun, as they say. Compliance, legal, we have this little statement on the screen. This comes from their investor presentation. So we're just kind of satisfying the compliance obligation here. For those that don't know, NewLake owns 35 properties, 15 cultivation facilities, 20 dispensaries. They are the landlord. They provide the capital to the cannabis operators and sale leaseback transactions. A lot has changed since we spoke a couple of years ago. More states have legalized, more companies have come and gone. And so that landscape, especially on the banking and the federal side, has changed dramatically, and we'll get into that. Anthony's been around the block a long time. What's funny is Anthony looks much younger than all the years of experience he has in this. I still can't believe over 30 years, you look like you're in your 30s at this point. But deep ties to Wall Street, very skilled and accomplished, and has been running the reins at NewLake for several years at this point. From a very high level, as we mentioned, they do own 35 properties, 13 states, 1.7 million square feet. They have a very solid dividend, AFFO payout ratio around 88%. They have grown the dividend almost 80% since their IPO. Obviously, as dividend investors, we want to see that number continue to grow, and we'll go into those steps of hopefully figuring out keys to grow that dividend and AFFO. This is the map of their properties and their tenant exposure. We have another chart that goes into their tenant exposure, but they do show the 13 states that they're operating in. Shocker that Texas is not one of those states. Here's the list of their tenants. Curaleaf, 25% of their annual base rent, 462,000 square feet across 10 leases. But this provides all the different facilities that they lease to. And chances are, if you're watching this, you may have one of these properties in your backyard as well. Here's the composition by state. Florida, Pennsylvania represent almost half the portfolio in terms of base rent, but you can see where this puck is going for them. And, a big topic that we'll talk about that's obviously dominating the airwaves when it comes to cannabis is rescheduling. And we obviously have seen the steps to move it up the ladder, but has it become official that it has been rescheduled, or are we still waiting for that ink to dry and it to become official? We'll get into that. Just pause 1 second. But this talks about the various things that are happening in DC that they're basically exposed to. And I think the key here is obviously talking about the Safe Banking Act, because I think, as Anthony has said in the past, this is the obstacle that really needs to be overcome for this to, let's say, really take off. So this provides, how they've been able to grow over the past couple of years, looking at the state level growth catalyst, as we've been talking about. I joke about Texas, but obviously they have been issuing medical licenses here. We do see cannabis, it gets more accepted. It's becoming more mainstream. We don't have to talk about the decline in alcohol sales and all that stuff. Obviously, that's been a benefit or a boon to the cannabis industry. We see the ads every single day, CBD, CBN. The product continues to grow and grow. And yes, I'm a fish fan and obviously have been around the block a couple of times. But I think from the medical research side, I think Anthony and many people would agree that we're frankly still in the very early innings of cannabis science exploration and figuring out more medical uses for the product. If you remember, if you flash back 5-10 years ago, nobody was talking about CBD or CBN or some of these other things, and now it's frankly become mainstream in its own right. CBD stores, just by itself, as an example. This is a very key slide. I love that they put this in their presentation: the 4 pillars to grow AFFO: growing rent, funding tenant improvement commitments, leasing properties, and transacting in new deployment there. So I'm sure Anthony will be spending some time talking about this. This walks around how they underwrite their leases with their tenants, obviously focusing on the tenant, the market, and the actual real estate in itself. And by the way, all of these slides are directly from their investor presentation. You can download this at any time. It is on their website. All this information is there for you to review. This talks about the deal structure of the leases and places we had briefly mentioned. And then a really great chart that kind of highlights their earnings, their balance sheet, the income statement, the dividend growth. Again, as I said, we care about the dividend side of it, and nice to see that growth over the past several years. So with that, let's turn off our little presentation here. Anthony, it's great to see you. Not like much has changed since we last spoke on one of these webinars. It's like business as usual for you, regardless of the regulatory nightmare that's been going on in DC, right?
I'll tell you, in the cannabis world, 2 years is 2 decades. And it is. It's great to see you.
Thank you. All right. So take a step back for people that are new to this story. As I said to you last time, and I thought it was the perfect question to kick it off this time. Why do you do what you do? And frankly, why should somebody care about NewLake?
Yeah, so it's a great place to start. And so I have been at it for over 30 years in various roles through my career. But for most of my career, I was running businesses where we focused capital on underserved markets, and that allowed us to gather returns that were outsized versus focusing on markets that are well traveled. And providing real estate capital to the cannabis industry has certainly been underserved. And we started the company back in 2019. Now, let me give you an analogy. In the real estate world, I think a good analogy would be cell towers. Back in the 1990s, when you first started seeing cell towers come up as a real estate investment category, it was very misunderstood. And the operators there were able to, the landlords, they were able to get real premiums, like mid-teens type of cap rates, because that asset class was misunderstood. And we thought the same thing would happen for cannabis. And if you look at our presentation, you showed it earlier, our weighted average yield on our leased properties is 13%. And so you can see we're getting above market yields. We're taking risk. I'm sure we'll talk about that. But the whole thing about why are we here and what are we doing, and why should somebody care about NewLake, is we are playing that disconnect between state and federal law around cannabis to focus on an underserved segment that allows us to earn outsized returns for our investors.
So you're different than, we'll say, your other publicly traded recognized peer. And I don't want to compare you to the other company, but look, let's address the elephant in the room. The other company was able to pull some levers and do a unique way to get themselves listed on the New York Stock Exchange many years ago. You guys are OTC listed. You're in a completely different universe. So for somebody who might be interested in buying NewLake, number one, what are some of the issues and the limitations that that person should be aware of when it comes to your stock listing? But also, because of your current listing status, what's the opportunity for investors based on where you're at?
I think it's very well phrased, because there is the obstacle, but that in becomes the opportunity. So let's go back and say that organization you're talking about that's listed on the New York Stock Exchange that does exactly what we do. They went public before the New York Stock Exchange changed their rules, and then the New York Stock Exchange agreed to grandfather them in and not delist them when the rules changed. As it pertains to us, we run our business to comply with the New York and NASDAQ listing regulations and the rules, except for the fact that we focus on the cannabis industry. So that's what's keeping us from being able to get uplisted. And beyond that, there's really no other difference on why we're on and why we're off. What is the limitation for investors? Custody. There is a rule for marijuana-related businesses, MRBs as it's called, and there's a list of a couple of hundred publicly traded securities, both debt and equity, that your traditional custody agents, your prime brokers, your custody agents will not custody if you're not on New York or NASDAQ. So the exact same company, and quite frankly, there is a company that uplisted to the New York Stock Exchange in the cannabis sector, TruLeaf, that had these restrictions up until April, and then they uplisted in June to the New York Stock Exchange, and those restrictions were lifted. So that is the obstacle. We talk with institutional investors who say, I get the story, I love the story, I just can't buy it. But there's the opportunity. For those that can buy it, you have the opportunity. I sound like a used car salesman. I don't mean to, but I'm excited about our business. There's the opportunity to step into this stock before traditional institutional demand can get in there and do the fundamental underwriting of the value proposition of NewLake and be able to move into a NewLake stock in size. And so usually you have retail investors or small cap investors lamenting that they have to chase the institutions on opportunities because of the institutions' access to distribution, their access to information, their access to deals. Well, here it's flipped. They have the opportunity to step in front of the institutions and take a position in a company before the institutions can structurally do so.
I want to stay on this for a second. I want to go back and talk about that uplisting for the other company as well as the Trulieve situation. You mentioned that the New York Stock Exchange grandfathered them in. I guess my first question is why? And like, was it because there was no publicly traded cannabis and they thought it was okay at the time? Could they retroactively go back and say, yeah, that's probably not a good idea. We're going to delist? I guess, why did the New York Stock Exchange grandfather them in the first place?
Well, listen, I can't speak to what's going on inside the New York Stock Exchange. Typically, they take that type of approach when they feel a delisting activity would be more adverse to investors than grandfathering them in. So I have to suspect that they stepped back and said, what is in the best interest of investors here? Because again, as an exchange, they're serving the company, but they're also serving the investor community. And so relegating them or delisting them, perhaps they had that particular view that they were harming the investors.
But again, I guess to bring it more to you, and you mentioned TrueLeave that they did successfully uplist. So if they were able to get over that hump, what can NewLake learn from TrueLeave's experience for them to go through that same obstacle as well? Hey, they did this, we did this. Hey, they did this, we did this. So therefore, it's time for you to list us. I don't know if you can comment on that.
Yeah, no, absolutely. And we actually made some commentary on our second quarter earnings call, excuse me, first quarter earnings call a few weeks ago. Let's first dissect exactly what happened. I won't go into too much detail, but in April, the Department of Justice rescheduled medical marijuana from Schedule 1 to Schedule 3. They did two things. They did that, number one. Number two, they allowed medical marijuana companies to apply for a DEA registration license and registration number if they were in compliance with state medical marijuana rules and regulations. Right. So let me just go over that again. They not only rescheduled, but they allowed those companies to sign up for a DEA registration number. By getting a DEA registration number actually makes that business federally legal. I'll very quickly go into this because it's a very critical point about how it applies to us. Let's take Tylenol with codeine, which is a Schedule 3 substance. Okay, that's legal. You go out and you buy it. I can't go and manufacture Tylenol with codeine. Set aside the Tylenol trademark. I can't manufacture that drug without a DEA registration, without a license from the DEA, right? So just because it's on Schedule 3 doesn't make it legal. The fact that they did Schedule 3 plus the registration and truly was able to get those registrations. They did have some non-medical business that they isolated. They separated the economic interest and the control of those assets. So what is listed is true medical marijuana business, which is just as legal as a Starbucks or a Home Depot. That's the way they were able to do it. So for us, we told our investor base that roughly 50% of our portfolio is pure medical activity. So, and they are applying for DEA registrations, all of those different tenants. And so therefore, those could be considered federally legal assets today and could be theoretically uplisted. But we have this other half, which is either adult use or mixed use, some adult use, some medical in there, that we're looking for resolution on. And so we could either sequester those assets similar to the way TrueLeave did and then just list the medically legal assets, or we could wait for what is called whole plant rescheduling because the DEA did something else in April beyond rescheduling medical marijuana. They restarted the rescheduling of, call it, all marijuana. And now some of you might be scratching your head. Wait a minute. How do you deschedule? Like, it's one plant. How do you deschedule part of it? Let's set that aside. It's the approach the DEA took. A hearing concluded in mid-July. In fact, today, the judge in that hearing to reschedule issued the transcript, which you'd be shocked. The DEA is the proponent in rescheduling and saying there isn't a lot of harm that comes from medical marijuana, and the vast majority of people that consume marijuana do it in a very safe way with no harm to them or others around them. I think about that for a moment, the DEA saying that. We expect that in the fourth quarter, the DEA will finalize the rescheduling of whole plant. So what does that mean, right? We had the medical part be legal. If you get the rescheduling with those DEA registrations and you have our tenants get those registrations, now the entirety of our business is legal and removes that barrier to uplisting. I know there was a lot there. I know there's a lot of detail there, but I don't want to be one of those people that come on and just speak at a very high level and miss those details because I don't want somebody to see Schedule 3 and think, oh, it's done. We need Schedule 3 plus those registrations.
Okay, so that's some really interesting stuff there. You mentioned your tenants. So we obviously have talked about TrueLeaf, but does that mean then that a Curaleaf, a Cresco, C3, Calypso, Acreage, PharmaCann, all of these guys are trying to do the exact same? Do you think all of these guys are trying to do the exact same thing that TrueLeaf did so that they're able to get their respective companies uplisted as well?
The publicly traded companies, most of the ones you've mentioned, have actually announced that they indeed are taking steps to get ready for uplisting. Other companies like a Curaleaf, they've said about 60% of their business is medical marijuana, but their business between medical and adult use activities is a little bit more intertwined and more difficult to separate in order to satisfy those listing requirements as it sits today. So what those organizations are doing is doing share splits as an example in order to meet the minimum share price threshold. They're redomiciling their entity from Canada down to a US jurisdiction. They're taking those types of steps to get ready. And they have all said that once you get the whole plant restructuring, then the entirety of their rescheduling, then the entirety of their business can be federally legal. Then they don't have to do any of that separation. They could just uplist the entire company.
So it seems like there's a lot of evolution that could potentially happen here, where we could potentially see 5, 10 new REITs listed on the New York stock, not REITs, sorry, new cannabis companies listed on the New York Stock Exchange. Should whole plant legalization come in, as you're talking about? But if everything else remains the same, and if I'm understanding what you're saying correctly, and again, if you can't comment, I get it, but if all else remains the same and we don't see those changes, is it possible we could see two publicly traded new lakes then, as you said? One that's focusing on the medical side, one that's on the adult use side with your underlying tenants?
I don't want to get into projecting what our ultimate structure could do. What I would tell you is this, though, David, that we've always taken what we consider an NPV approach to decision making, whether that's investing, whether that's in a workout situation, whether that's looking at our corporate structure. What is the best net present value? And in fact, we looked at a similar structure and we talked to investors about this 2 years ago when Curaleaf and TerrAscend moved from the Canadian Stock Exchange to the Toronto Stock Exchange. That custody restriction I mentioned earlier is also includes the Toronto Stock Exchange. So you can custody if you're on the TSX. So they embarked in a ring fencing, let's just call it, exercise of their businesses to get listed on TSX, which opened up some custody for them. We evaluated that structure. Given the friction costs, we didn't think that it was a good NPV decision to do it. So I can't tell you what our ultimate structure would be look like, but we're going to make sure that what we end up doing provides the best net present value, not just in cash flows, but in trading value for our shareholders.
So now let's take a little bit of a different approach here. We talked about your tenants. We've gone in depth about some of your tenants and everything. And now, when you think about other REIT sectors that are out there, like let's say retail, retail REITs have a tenant watch list. Party City, Michaels, pick your favorite retailer. We're concerned about what's going on here. How does that work for you in the cannabis industry? Are there tenants that are potentially on your watch list? And then, you know, the other topic there is, do your tenants impact your dividend? Meaning you have a higher dividend yield. Is that because the tenants are, let's say, lower quality? Or is there other moving parts that are there? Because a lot of people love NewLake for the dividend payout that you're at.
Yes. So in a traditional REIT, like take those retail REITs that you're talking about, they have a watch list because they have a large group of tenants that they don't have to worry about per se. When we started this company, we knew that we were focusing on an emerging industry with a limited history that had regulations different on a state by state basis, federal illegality, and a lack of access to the US capital markets. If you just think about that, by definition, every one of our tenants, in my opinion, would fit the definition of watch list in a traditional REIT. And in fact, we behave in a way that suggests every one of them are on a watch list. We're talking to every one of our tenants on a regular basis. We get quarterly reporting. We're monitoring the properties. We're thinking about what we would do if that tenant experienced financial difficulty. Having said that, of course, within our ranking system, we have some of them rise to the top where you really worry, and ones that you don't worry as much. So I'd put a Trulieve and a Curaleaf and a GTI and a Cresco toward the bottom. While we still watch them, they're the higher end of the credit quality in the sector. They have cash flow. They have large scaled operations. And at the upper end, we talked about this publicly on our call, we would put a company like Acreage, which we have one property with Acreage Holdings, and we've been working to move properties away from them through M&A. And so we have that on a watch list. We have a tenant, Cannabist, which is in bankruptcy. They've been current on rent. We announced this on our call. They're current on rent through August. They went into bankruptcy back in March. And so we're working through that, and there's a buyer for some of the properties in our portfolio. So as we work through that. So the point of all this is that this is a high risk investment arena. And just look at the yield. You mentioned that 13 yield. My goodness, you don't get paid that type of yield without taking some risk. And so by definition, it is risk, but we focus laser focused on monitoring all of our tenants.
I commend you, and I talk to your associate pretty regularly, as you know, and I tell her how much I appreciate your transparency when you announce earnings, because you don't simply stick your head in the sand and ignore it. You do take it head on, you face it head on, and you say, look, here's what's going on with this tenant. We're working this out. We have the deposit in place to eat, take from the pot if necessary. You're very willing to show your hand on where you might be operating with one of your troubled tenants. So kudos to you for, frankly, not shying away necessarily from some of that bad news occasionally.
And thank you. Listen, transparency. I've been a banker. I've run a couple of businesses. Transparency is of utmost importance to me and our team. There's no reason to hide behind this. People could read through the filings. They could find out information. And again, we never started this business saying that we were never going to have a tenant difficulty. No, we actually priced the portfolio to be able to absorb tenant difficulties. It's also been the approach that we've taken with our dividend. You showed that chart earlier, which showed a topping off of the dividend. That was a strategic decision that we made a couple of years ago, understanding where the industry in 2022 and 2023 started to encounter significant headwinds. And if you go back earlier in that period, we had periods where we had an AFFO payout ratio with a 7 handle on it. And I was getting questions, boy, why don't you raise the dividend? Well, we knew that this period of difficulty was going to persist in the sector for years, and we wanted to make sure, we know the dividend is sacrosanct, and we wanted to make sure that we were setting the dividend at a sustainable level, one that we thought we could very comfortably be able to cover, and not create a higher dividend and get excited for a quarter or two and then find that we're above 100% payout ratio. We want to be very thoughtful and make sure that any dividend we have is one that we feel confident we can sustain.
put it a little bit different way because you won't say it, but I will. No company has ever been rewarded for cutting their dividends in the world of REITs. And so it'd be very short-sighted for you to raise it and then subsequently cut it a quarter or two later because of technical difficulties. You frankly will never be forgiven by that shareholder for doing that, right? So, I mean, that's the other way to look at it. You're never applauded for cutting your dividend. Um, we've talked a lot about what may be ahead. So let's turn the page. The year is over. We're in 2027. What do you think the market looks like? Again, assuming all else, we've talked about what some may be happening. But I think the key thing here is, especially from where you sit, what does the financing market look like next year?
Yeah. We didn't actually talk about everything that's currently happening, and I want to pause and touch a couple of those before we get to
Yeah,
27.
come on.
Hemp restrictions. This is very important for this industry. As we sit here today, November 12th is the deadline for hemp derived products to be sold in the US. These are products that were inadvertently legalized in the 2018 Farm Bill, and they are not age gated, they're not regulated, not tested products that compete directly. They're intoxicating products that compete directly with the cannabis industry. And it has siphoned off sales and contributed to the financial difficulties of the industry over the last few years. In last year's continuing resolution to reopen the government in November, it included a rider to close this loophole and terminate all of those hemp transactions. We see in Ohio, where Ohio adopted those rules early, you're seeing, depending on the operator, anywhere from 5 to 20% lift in top line revenue since those rules went into place. So just think about that, right? For all of our tenants that operate in states that have these competing products, we'll see top line growth. And so that should improve everyone's EBITDA because they're not going out and having to originate that new consumer. There are surveys coming out saying consumers are now, they enjoyed getting their product through the hemp channel, but now they want to go into a dispensary and they want to get their product through the state legal channel. So that is a big tailwind for this industry. Plus, I think you get the rescheduling, which is another tailwind. And so where we are in 2027, I think if we get the rescheduling with those DEA registrations, really opens up the US capital markets that this industry has been frozen out of for the last 5 years. Us included to an extent. We talked about that custody restriction. These restrictions went in place about 4 months after our IPO in 2021. And so I think in 2027, we're going to see a much more robust access to capital markets for the industry.
For those that aren't familiar, as I mentioned earlier, and we've talked about in the past, and I think it's still one of those main factors that we're waiting for, is the Safe Banking Act. Can you talk a little bit about Safe Banking Act? What it would mean for the industry if that legislation is passed, and then, frankly, what that means once it's fully implemented for all the players that are out there.
If we get rescheduling to Schedule 3, particularly with those registrations, safe banking becomes less important. Of course, you would love to have legislation specifically providing a safe harbor for banks, even if you had the Schedule 3, just to give banks that warm and fuzzy. But it shouldn't necessarily be necessary if you get rescheduling completed later this year, as we expect it will. But getting that safe harbor would be really important if the definition of the entities that receive that safe harbor includes exchanges and custody banks. If it's only business banking services, there are over 600 banks that provide services to the industry today. So it's helpful. Where it could be really helpful is if safe banking passes with the right safe harbor for custody banks and credit cards, which is another tailwind, because if you're a federally legal business, and some of the medical only businesses have been talking about accepting credit cards and opening that channel, we think that's another 10 to 20% lift in sales just by being able to accept credit cards.
That was what I was waiting to ask, and I was clamping at the bit to ask that question. Does that mean that I could finally walk into a dispensary and pay with my credit card and not be cash only?
For medical cannabis products, you should be able to, but it's going to take months for the cannabis companies to connect with the Visa, MasterCard, Amexes of the world and be able to get their transactions whitelisted, so to speak, so that it could get through the network. It's just going to take time for it to filter down. It's not automatic.
But what if I'm going to see Fish play at Red Rocks and I'm going recreational? When does that credit card transaction potentially take place? Is that a 5 years down the road type of thing potentially?
We're back to Schedule 3 with registration numbers. If you get Schedule 3 with registration numbers later this
Whole
year,
plant, all that
that
stuff, then we
that
should.
whole plant, then all of cannabis, if they have a DEA registration and they're in compliance with state laws, then those businesses are just like a Starbucks or a Walgreens or a Ralph's supermarket, and they can go out and the credit card acquiring companies can go and put machines into their terminals into their dispensaries, and then you'll be able to swipe away. Some things you
Let's
talk about
go.
Vegas, right? So you talk about Vegas. Here's a really interesting piece about why hemp is so important. You go to the strip, dispensaries are not allowed on the strip, but yet you could walk up and down the strip and you could buy intoxicating THC products because those are technically smoke shops and they're technically selling hemp, right? So you've seen sales in Nevada are down 15% year over year, 24 to 25, 25 to 26, because of all of this hemp activity. You eliminate all of that from the strip. And there is a proposal in Clark County to implement a ban early for all those hemp products. You're now sending those purchases into the off-strip dispensaries, boosting revenue for the industry. So it's a live example of how this hemp restriction could really be helpful um, to grow revenue for the industry.
Yeah, I'm sure Planet 13 is itching at the bit to get that happen. I mean,
They
that
were
place is
just
a global.
acquired. Yeah, they were just acquired by Vireo Growth. There's a lot. There's
Wow.
some M&A happening in the industry.
That's a heck of a property they have out there, that's for sure.
Yes.
All right. Well, since we last spoke, more states have come online, let's say. So, how do you benefit from new state legislation as programs expand, frankly, in states like Texas and Georgia? But I guess more importantly, where do you think the biggest opportunities for growth are? What states do you feel like could be the biggest opportunities for growth?
It's actually today, I'd say our growth opportunities are more broader across more states than it was early on. And here's why. Early in our evolution, we focused on limited license states. These are states where they more strictly regulate alcohol. For instance, in Pennsylvania, you have to go to a package store to buy a bottle of vodka. But in California, you can walk into a supermarket and buy a bottle of wine. And so with limited licenses, we expected there to be better performance in those limited license environments because pricing would hold up. And by and large, that has been true. It has been the right approach thus far, and it's why I think our portfolios perform better than others in the industry. However, we are now at a point where there are very mature markets like a Colorado or a California that heretofore, or even a Michigan, where heretofore we would have stayed away from those. But when you see the pricing, take a dispensary as an example. If that dispensary has been open for 5 years and they have absorbed the price compression that happened in that market, and they've had steady revenue and steady EBITDA, that's an underwritable transaction for us. And so I think there's more opportunities for us today because we can go across more states given the dynamics of the market. Where's the biggest opportunity for us? I couldn't really nail it to a market, but where we closed a deal in Kentucky a few weeks ago, and we announced this. It was a dispensary transaction that we did for an existing tenant C3. Kentucky is a new medical market, opened up earlier this year. You mentioned Georgia. They recently made changes to the Georgia program, medical marijuana program, that will significantly expand that program. That state's going to need some additional build out for cultivation capacity and dispensaries. And then Texas, where you are, my goodness, Texas is such a, I guess if I had to pick one, it would be Texas. I'm not pandering to you, but you had a very small medical marijuana program that they significantly expanded recently. The implementation of the new rules is significant. They also added a number of new licenses. These are new entrants that need new infrastructure. At the same time, Texas, as of July 31st, implemented a hemp ban and Texans are up in arms about this. And so you have a category of consumer that has been consuming a THC oriented product that's no longer available to them. And you have this budding THC consumable product set that's got budding, you get my pun. That is thank you for that. I thought you would have been faster on that one, David. That is that I think is going to step in to be able to fill the void. And that market has very small cultivation footprint today. So between cultivation and being able to build out a dispensary complex to reach the over 30 million people in the state is a meaningful opportunity.
I mean, what do I know? But I always say that Texas is going to be the 49th or 50th state to fully legalize it. It's going to take the Supreme Court to legalize it, I think, for it to happen in Texas. But again, what do I know? Um, we spent a lot of time talking about your tenants. Let's look more in-house. Let's look at financials. So, what should the average investor understand when it comes to your capital stack, your balance sheet, and your leverage?
Yeah, two things I would say. Number one, net cash. We are in a net cash position. We have a small amount of debt outstanding, but we have more than enough cash to handle that. So net cash position of about 15 to 18 million dollars. So a phenomenal balance sheet. In fact, I can't find another REIT out there publicly traded that has a better looking balance sheet from a debt perspective. The second thing related to that is we're underlevered. We actually, from a corporate finance perspective, we need additional leverage, not need. We should take additional leverage as we continue to grow the business and invest in new properties in order to optimize the return on our capital. Now, I'm not talking, David, about over levering this business. We certainly don't need it because we have those above market yields on our underlying leases. But we certainly should be leaning into the leverage. We have a $90 million facility that we just actually extended for 2 years, and we lowered our cost of borrowing by 100 basis points. We just did announce that in our most recent earnings call. So by utilizing that facility, by putting more leverage on, I think we'll be able to get a better return for our shareholders.
Now, you've been very transparent about dividend coverage. You talked about the chart, all that stuff. So, for a dividend investor, what are the potential keys or, let's say, catalysts that need to be put in place to continuously grow that dividend?
Yeah. So as you pointed out before, we had our growth from four areas. It's going to be our escalators. It's going to be tenant improvement dollars that are going out. It's going to be tenanting our three available for lease properties and then new transactions. And so those are the key levers to be able to grow the AFFO of the business. And we have a stated payout ratio of between 80 and 90%. And we're currently at an 88% AFFO payout ratio. And so I think we want to see ourselves get through let's just say the tail end of the difficulty in the cannabis industry. And we're in the baseball season. So let's say we're in the seventh inning of that difficulty for the cannabis industry. And some of these tailwinds that we talked about here today are certainly going to pull us through the ninth inning and hopefully to a victory. So I think we're going to have a continued period for the next quarter or two where we'll see some of that stuff shake out. And then some of that growth is going to start catching up to us. And I'm not doing any forward-looking statements, but hopefully we'll be able to continue to do what we did earlier this month and close new transactions.
That's why we show that disclaimer compliance side at the beginning, just for that right there. All right, so we got this interesting question, and curious how you feel about this. Where do you guys fit in the cannabis chain life cycle, and how would this potentially change as cannabis becomes more mainstream?
We sit in the life cycle, I believe, the same way. Well, we will ultimately sit in the life cycle the same way a retail sale leaseback REIT or an industrial sale leaseback REIT sits in the life cycle for their customer base. And my point there is that this is a tried and true approach to funding your real estate needs, right? That's why Walgreens does it, Starbucks, Home Depot, Lowe's, etc. I think the cannabis industry, we've been more of a strategic partner for their expansion because of the limited opportunities for them to get access to capital for their real estate needs. But over time, I think we're going to be able to leverage our relationships and our knowledge to continue to be that trusted advisor. Um, I think we've worked hard over the last 8 years, 7.5 years, to build that relationship with the industry, and certainly coming through this difficult period and getting to the other side. I think we have an understanding of this industry that nobody else can touch. Quite frankly, on the real estate capital side, proven out by the performance of our portfolio.
And for those that are wondering, no, Anthony cannot get you discounts at a local dispensary. No, NewLake does not consume the product, test the product, or anything. They're simply the landlord. I've already asked those questions in the past, in case you're wondering. Let's talk political climate for a second. Don't want to talk about, specific people, places, things like that. But how is the political climate shifting, and how do you see that impacting potential future reform?
This is fascinating, right? As we sit here today, a couple of points. As we sit here today, less than a year ago, we had an Oval Office press conference where the president signed an executive order to expeditiously reschedule cannabis from Schedule 1 to Schedule 3. You had a president. You had the previous president, President Biden, initiate the rescheduling process. So this is a bipartisan political issue of support. I shouldn't say issue, but an area of support, bipartisan. Now let's come to today. As we sit here in the end of August of 2026, we just had the Senate 2 weeks ago have a protracted fight around a continuing resolution so we don't have a government shutdown at the end of September heading into midterm elections. The biggest obstacle to the Senate passing that continuing resolution was the closing of the hemp loophole. There was about a week's worth of debate on no other topic that was sitting before the Senate relating to the CR other than the closing of the hemp loophole, potentially regulating hemp, cannabis, rescheduling. So this plant is literally front and center in the Senate, getting debate on the Senate floor about what to do with it. I then point to polls. This is a very popular topic among Americans. Medical marijuana, for over a decade, as polled by Gallup and Pew, shows nearly 90% of Americans support the legality of medical marijuana. I just want to say that again. Nearly 90% of Americans think marijuana should be legal for medical purposes. So from a political perspective, don't you want to be aligned to that? Now, to be sure, there are still some prohibitionists. They tend to be older, 60s, 70s, 80s. There still are some prohibitionists that exist in some corners of government. But by and large, we're seeing this growing support, at least for medical marijuana, across the political spectrum. One last example here is Kentucky. A lot of people think this is a Democrat-Republican thing. Kentucky, which is a red state, and voted for Trump roughly, I think 58 to 60% of Kentuckians voted to support Trump in the last presidential election. In the ballot box, they also had on their ballot to ban medical marijuana from their communities. There were over 100 different jurisdictions that had the option to opt out. Not a single jurisdiction in Kentucky, deep red Kentucky, opted out. And some of those jurisdictions went for Donald Trump 70, 75%, but yet they still opted in or chose not to opt out. So what is that telling me? That's telling me even deep conservative Kentucky believes that there's potential medical benefit from medical marijuana and they want it available in their community. So I think the political climate is positive for the continued support and evolution of medical marijuana.
We started out this conversation, and I said that I still thought we were in the early innings of the medicinal exploration of this. So, two-part question. What inning of the game is the entire cannabis industry in right now, do you think? And then what inning or how much growth opportunity do we still have on the scientific front?
We are very early. I would say we're in the second inning of the cannabis industry. And while the last decade has felt like decades, right? It's felt really long. This industry has a lot of room to run because we have well over $100 billion industry in the US today. And there's a global industry, by the way. It's legal in England. There's a medical program in the UK. There's a growing international, it's fully legal in Canada, a growing international business. But let's just stay focused on the US. You have well over $100 billion industry today, and there's only 30 billion in the legal channel. That means $70 billion as an estimate is the illicit channel. So this is about converting people to be consumers in the legal channel and not obtain their product in the illicit channel. So that's just a massive tailwind and tells you that we really are in the early innings of growing this industry. On the medical side, I bet you most people listening to this have never heard of the endocannabinoid system. This is similar to our nervous system that has been not developed, it's been discovered probably about 2 decades, maybe even before that. It's been discovered that we have receptors in our endocannabinoid system that interact with certain components of the cannabis plant. So you talked about CBD and CBN. That's part of what makes those products so successful, is because they target different receptors. And we are really, I mean, are we in the first inning on that? I'd say we're still in the dugout when it comes to the research necessary. Because of that Schedule 1 designation in the US, our scientists haven't been able to study it here. So therefore, we've had to rely on some studies in Israel and some studies in other countries. But here's where I think by getting to Schedule 3, we can fuel a significant investment into much needed research so that we can map this endocannabinoid system and identify and understand a little bit more, why do cancer patients take cannabis to manage nausea? What exactly are the interactions to do that? Why does Epidiolex work so well to manage childhood epilepsy? Why do people take it as an antidepressant or to treat post-traumatic stress syndrome? So, there are all of those questions that I think we'll be answering in the next 10 to 20 years, and potentially faster with AI. So I'm pretty excited about the future for this industry.
I mean, I don't want to get off topic here, but when you think about how microdosing has grown more mainstream over the past few years, mushrooms, legalization across several states, the list goes on and on. And so clearly, all of the drugs are getting more and more scientifically tested, medically cleared, and everything. Because as you said, I liked your analogy that we're still in the dugout. We haven't even come out to play the start of the first inning here. And that's cannabis, mushrooms, LSD, all of these other drugs that are out there.
Psilocybins,
Um,
yes.
so pretty fascinating. All right. This is about as easy of a softball question for you. What does the market have wrong when it comes to NewLake? And more importantly, if one of your analysts that covers you is watching this, what would you like to tell them to try to convey the wrongs that they think about your company?
Yeah, listen, I love that question because when you say what does the market get wrong, what that implies is that the market is representative of all potential investors, and all potential investors are making a decision to invest or a decision not to invest. Go back to what we talked about custody wise. The market in our case is not the market that everybody else thinks about, because the market for NewLake is eliminating those institutions that can't custody us, right? And so that is a key, that is a key point here. Sometimes I get asked the question a different way. They'll say, boy, you have a high dividend yield. What are investors missing? Because, it could be a yield trap. You worry, okay, why do you have that high dividend yield? Usually investors, or the market is pricing that high dividend yield because they think you have a leverage problem, or they think you have a real credit problem in your portfolio. Well, we've already talked about no leverage, no net leverage, right? We're in a net cash position, so it can't be the balance sheet people are worried about. And from a credit perspective, we have an 88% payout ratio, and we have one tenant that we've talked about that's only 8% of rent. So even if all of that goes away, we could still cover the dividend. So okay, if it's not that you're at risk to cover the dividend, then why is it priced so high? And in my opinion, it's because we have this large swath of the market that can't act upon the opportunity set. I think those institutional investors are the ones that would look beyond the dividend to say, what's the quality of the portfolio? What's the implied cap rate on the cash flows and on the NOI of that business? And I think those investors, well, I know because I talk to these investors, they say, boy, I can get paid an 11%, depending where we're trading, 11% dividend yield to wait for these catalysts like uplisting and the growth that's expected to come from the stuff we've talked about here today, David. And they say, I get paid that high yield and I could potentially watch your implied cap rate go from an implied, call it 14 today, to even an 11, maybe a 9. Forget about it ever getting to a 6 cap or 6.5 cap like the rest of the net lease universe. So there's yield with the opportunity for appreciation. I think that is the key opportunity set in this story for NewLake.
Um, Besides trying to score Metallica Sphere tickets or sending kids off to college, what keeps you up at night these days?
Literally everything, David. It sounds trite. It sounds trite to say it, but this industry is so dynamic. We're doing things like modeling out M&A in the industry to try to think about where concentration comes from. We're looking at pockets of risk in our portfolio and proactively thinking about where can we manage risk. An example of that would be earlier this year. We ended 25 with 5 properties with cannabis. We talk about them bankruptcy and that they're current on rent as we sit here today. But we have 5 properties at D's 31. Today we have 4. One of those properties was moved to another very good credit quality company. Another example of that was we talked about acreage being one of those that we're watching. We had 3 properties with them 2 years ago. We were down to 2 at the end of last year. We're now down to 1 with them. And so it's about managing risk. And so literally every day we're going through our portfolio thinking, where can we manage risk? Where can we be proactive? And where can we be ready for what may go bump in the night so we can minimize the opportunity for dislocation. So I wanted to give you the detail because it's right. People say, worry about everything. But literally in this business, back to your question about watch list, in my opinion, every one of our tenants has to be on a watch list because there's so much change going on in this industry.
I want to thank you for the past hour of information. One of the reasons I love talking to you, as I said before, is you don't stick your head in the sand and ignore what's going on around you. You literally combat it head on. You're in those trenches every single day fighting those battles. And I really appreciate the transparency and the level of detail that you're sharing with us because I feel like, it's still one of those newest sectors that's out there and nobody quite, I feel, understands it truly to the way that you do where you sit. And I learned so much even if it's just catching up in a 5-minute phone conversation with you, I feel like I always learn so much. And I'm very optimistic when we sit here, hopefully less than a year from now this time, and we revisit this conversation that rescheduling is official, the DEA legalization, everything has happened at the state level, and that now it's like, buddy, we're going gangbusters. We're going crazy coast to coast because things have been more welcoming. So I wish you a lot of luck over the rest of this year.
Thank you.
And frankly, keep on keeping on, my friend. It's great to catch up with you. Thank you again.